Reports of renewed attention on the silver market are beginning to circulate across financial discussions, drawing the focus of investors, traders, and market observers. The phrase silver squeeze has once again entered the conversation as participants evaluate movements in the precious metals market and assess the broader reaction within financial systems. While the term itself reflects heightened activity and interest surrounding silver trading, the discussion is largely centered on how markets are responding to shifts in investor sentiment and demand patterns. In recent market commentary, references to a possible silver squeeze have appeared alongside observations that some segments of the market are experiencing increased volatility. These developments have drawn attention because silver, unlike many other commodities, occupies a unique position in global markets. It functions both as an industrial metal used in manufacturing and technology, and as a precious metal that investors often purchase during periods of economic uncertainty. Because of this dual role, movements in the silver market frequently attract close monitoring from analysts and financial institutions. The renewed use of the phrase silver squeeze reflects concerns that buying pressure in the silver market could influence pricing dynamics and trading behavior. Market participants are paying attention to how supply and demand conditions interact with trading activity in both physical silver markets and financial instruments tied to the metal. At the same time, conversations about the situation have begun to spread more widely across financial media and investor communities, bringing additional scrutiny to developments within the sector. As these discussions continue, reports indicate that certain market participants are closely watching price movements and liquidity conditions associated with silver trading. When significant numbers of investors move into a particular asset class at the same time, the resulting increase in demand can affect pricing trends and market stability. For this reason, developments linked to silver trading are often viewed within the larger context of global financial markets. Observers note that precious metals frequently attract attention during periods when investors are evaluating economic signals or reassessing portfolio strategies. In such circumstances, metals like gold and silver are often monitored for indications of shifting investment behavior. As a result, when the concept of a silver squeeze returns to public discussion, it tends to prompt renewed interest from both retail investors and institutional market participants. At this stage, the conversation around the silver market is primarily focused on the reaction of financial markets and the level of attention being directed towards silver trading activity. Analysts, investors, and market observers are continuing to review available data and monitor developments as the situation unfolds. In the next part of this report, we will take a closer look at how the current discussion around the silver market developed and examine the factors that have brought renewed attention to the idea of a potential silver squeeze.